Good evening, everybody. Welcome to your inner circle session for this Wednesday. Today, we're going to have just a little bit of a deeper dive on markets. There's some really big stuff coming up over the next few days. Obviously, we've had a fairly major sell-off in some asset classes. Some asset classes don't seem to care very much. But we'll try and unpick what's happening, why it's happening, and of course, arm you with some things to have a look at. We're going to talk bounces. We're going to talk US shutdowns. We're going to talk the Fed. And of course, we're going to have a look at some charts, most importantly, to see what we can see right the way through the session. So if there's any particular charts you want me to have a look at, anything at all, then just give me a yell. It is your session. Just a little important message just to kick things off to remind you this is for educational purposes only. Please make sure you don't do your own due diligence on anything you see here. Make sure you follow trading plans that, of course, manage risk on every trading action consistent with your own personal trading objectives and financial situation. That's on exit and, of course, entry. Thank you to everyone who's already said hello. It's always a real kick to see you here. Thanks to Wayne and Hugh and Johnny. And thank you for the heads up on the AV. As I said, your session, so feel free to pop in a question or two at any stage, and I'll do my best to answer it here and now. If I can't, I will come back to you and have a wee look at what's going on and give you a little message. For those of you who want to connect personally, then I'll put my email address right now into chat so you can do that. And there we go, all ready and good to go. Thank you for everybody who's watching on YouTube, either live or hi Sonia, either live or in on catch up. Either way, you're very, very welcome. It's a delight to see you here. Right, moving on then onto some stuff. Let's go through some headlines and then we'll do a little bit of a deeper dive as we go on 3 or 4 different things. We'll have a look at charts along the way, as I said. So if we look at what's happening with US equities, they continue to sell off. Nowhere near correction territory. The Nasdaq did pop down around about 6% from its highs. We've got, we'll have a look at charts right now. Futures are sort of semi okay. Again, we'll talk about those in a bit more detail in a moment. Today, it is quite a big day in the US as the FOMC minutes, the Fed minutes of their last meeting, and we'll talk about the Fed in a few minutes in a bit more detail. We've still got big earnings. We've had an incredibly good earnings season in the US. We are right at the back end, and we've got Nvidia reporting after the bell tonight. Massive in all sorts of ways. And we'll sort of talk about the implications of that number on the market as a whole in a moment. But also we've got Walmart, Target, some of the big retailers reporting this week as well. And we've got big data coming. So generally speaking, some marks pausing. What did I write there? So the markets are pausing at the minute as we sort of wait for those information. Obviously, we've got a reopening of the US government, but the reopening's been shadowed by the Epstein files vote, which is also to do with the horrible man who had and his sex trafficking, paedophile ring, etc. But obviously, a lot of the files have been suppressed in terms of their release, despite pre-election promises. They appear to be coming out from public pressure. Really, it's quite spectacular. The Republicans had sort of squashed it, and then on the back of public pressure and a few defections have been forced really to do that. There was only one dissenter in the House vote, and then it went straight to the Senate and was passed, and now awaits Trump's sign-off. Whether we get the full or unfull version remains to be seen. But their impact on markets may be temporary, but we shall see. Right back to the now, the US futures are holding just above neutral. As I said, Asian markets are soft today. ASX is around about 2.25% to the downside. Asian markets are slightly to the upside, generally sort of mixed, but not really moving very much from neutral. We're going to have a look at charts for all of these in a moment, but just as a brief overview, the US dollar index is range bound. Gold, so looking as though it might sell off again, is up today. It's supported around 1440 for right now, though that might change as the US session progresses, I would suggest. But a fairly significant pullback. We've had a move to the upside, a pullback again, but higher, interestingly, a higher low. We'll talk about that on the chart. Copper and oil also in range bound states with the EIA data. That's the only way around, isn't it? It's up at it's the AIE data due later tonight, which is the oil inventory data. Bitcoin's been one of the stories of the week. It is in bear market territory after the last few days of selling, holding just above 90,000 today. It looks very precariously balanced. We'll have a look at a chart in that. And of course, we've got final earnings, got US government trade news will be important. The FOMC minutes today, as I've already said. Now, importantly, one of the implications of this longest US shutdown in history was the lack of government data, which probably actually didn't do the administration any harm since it was going south. But we may get some, or it's anticipated that we get some, the non-farm payrolls very belatedly, which we haven't had for a couple of months, at least the latest read on that on Thursday, along with weekly jobs. Well, that's going to be so important in terms of sentiment. Maybe one of the reasons why markets have started to get twitchy is that lack of clear economic data to make decisions on top of what the Fed are thinking. On top of that, we've got global PMI data, which is the flash manufacturing number, coming out on Friday across the board, and we shall. That's obviously going to be important, not just in terms of the US, of course, but globally to see what the impact of tariffs may or may not be. We've still got sticky inflation in the US, which obviously the tariffs are contributing to some degree. But we've got some movement on that as well, which again we're going to give more detail about in a moment. So that's the overview stuff. Good question. How did Epstein earn his money? It was worth a lot of money. There's lots of speculation around, but he invested. He got people to invest in him. He was supported potentially by some governments. All may come out in the wash in a little more detail. But obviously, his relationship with Trump, his friendship with Trump for many years before they sort of friendship split up, allegedly. There was quite a lot of real estate dealing going on, and etc. etc. Anyway, right. Let's just have a look before we have a look at bubbles. Let's just have a look at some data. Let's just. Let me go back to that for a second. And I'll sort of bring some net data up. Where should we start? We'll start with some US data. There we go. So this has actually fallen off. Even the last half an hour, this has dripped right to the downside. But looks one. Oh, it's Black Friday, isn't it? This week. But you can see there the Dow was the holding on fairly well. Was down another percent last night. That's about 3% on the Dow. Nasdaq dropped another 1.2%. S&P 500 not surprisingly dropped. There was some joy in the Russell, somewhat surprisingly, but you can see the big tech stocks. So Amazon, Tesla, and Nvidia, Microsoft all to the downside. Apple managed to hold near neutral. Google and Meta also down to the magnificent 7. Not very magnificent at all, to be honest. These futures were actually up when, as I said, when last I looked about half an hour ago. So it looks as though there's a little bit of a sell-off going on. Again, wonder if there's any more news come across. You can see some strength in the US dollar today. More selling in Bitcoin. That's quite dramatic. That looks as though it's selling off again. Weakness in the Aussie dollar as well, but generally speaking, risk on assets not doing particularly well. In terms of the data that's coming out, let's just check out what's going on. You can see here today we've not had a massive amount of a big data, the wage price index, which is important in terms of the RBA decision making. That remained static and remained at what was expected. We've got the UK CPI due, which is expected to drop off after the BOE. Let me just refresh this. I think it's another hour. I'm trying to work out my time zones because everything's changed. Oh no, there it is. I thought it might be there. That's actually higher than expected, but lower than last month, so sort of a mixed bag there. PPI is also shaky. We've got final CPI coming out of the Eurozone, but that is not likely to move markets or change expectations. It's the first number that usually does. And then tonight, the FOMC minutes. As I said, I'm going to talk a little bit about the Fed a bit more in a moment. And this is the biggie. This is the biggie. We are expected. So there's a non-farm employment change. We are expected to tick up from the last read, which was 2 months ago, by 30,000. But it's a real flick of the coin in the air. We've sort of been reliant a little bit on things like the ADP jobs report, which is private sector stuff. There's the weekly employment as well. Notice this is tentative. They may delay that if getting the non-farm payrolls out. The Philly Fed Manufacturing Index is also interesting. If it does show growth like that, that would be actually deemed to be quite positive. And then, as I said, Friday, you can see lots of flash PMI data coming out of the Eurozone and the UK and Australia and Japan, and later on the US. And then, of course, we've got consumer sentiment, which is likely, if we look at the election results from last week, likely not to be very clever. I'm just having a quick look. Watch for Australian CPI next Wednesday, by the way, as well, just as one of the highlights. Yeah, there's lots of. If you want to, I'll put this so you can have a little bit of a look at this for a bit more detail on the jobs data that's due and why it's important. I'm going to pop this into chat just in case you want to have a look at that later. If you give it a second, you YouTubers, I'll also pop it into the chat there. So you've got that there too. Again, you can click on that link if you want to. Let's just close some of these down. We've seen these have all turned red in the last few minutes, and there's Asia. So we've seen there's Asia. You can see now. You can see there that the Nifty is doing okay. That's still open, but in Europe, it's all gone red. It's all gone red. Maybe some risk coming off the table before that news coming out of Japan. Sorry, out of the US later. Right. Okay. Let's. I just want to pop up. We'll come back and have a look at that in a moment. So let's talk bubbles for a little minute or two. So there's lots of people starting to compare, or has been comparing what's been happening in tech and the AI world in particular to a bubble. A bubble really is when asset prices rise beyond their fundamental value. Optimism, and this time is different, and valuations stretch to extremes. But if we look at the valuations associated with something like Nvidia, for example, it's only about 30 times. P is only about 30. It's not grossly overvalued on company metrics, and of course they report tomorrow night. Generally speaking, if we look at what happened in the dot-com bubble, then valuations disconnected from company production. Those companies weren't producing anything. But if we look at the likes of Apple and Nvidia and Google and Meta, who were in the AI space, and who have also got revenue, it's not just all speculative. If we look at Tesla, of course, with all of their fingers in all sorts of pies, as well as the cars, it's sort of almost a secondary concept in terms of where they're going. Then it doesn't fit with the concept of a bubble. Perhaps a little overvaluation, that's fine, but not We have had some herd behavior accelerating gains. Price action generally hasn't been unstable. It's just been strong. Liquidity has been good. So if we look at other historical bubbles, are the AI stocks in a bubble? Well, no is the obvious word. They may be slightly overvalued, but they're not in a big bubble, which is going to involve in a 50% plus pullback. Okay. As I said, the Nasdaq isn't even correction territory yet. It's less than 10% to the downside, around about 6%. As I said, we'll look at Nvidia chart, etc., in a moment. So let's just have a look around some charts. Bitcoin's a good place to start because this could be one asset that may be bubbly. Certainly, the crypto world has been very strong. But if we look here, you can see that pullback there through that critical 100,000 level. But we've had this price action over the last few days, so it's really turned significantly. If we look at a weekly chart for context, you can see why it stopped here just around about 92. And the next port of call, if we do get continued selling, is probably down to a remarkable 80,000. If we look at what this means at the top of this versus where it's at now, it's down just below 30%, 28.5%. So very definitely in bear market territory. We have had pullbacks like this before. We had one here, which at its worst was 30%. That was at the beginning of the year in January, of course. So this is not, even here, we got from top to bottom was around about 30%. So that's 30% pullbacks really since the beginning of 2024. So in the last 2 years. So this is not unusual. And if you look at the long-term chart, there's a 200 MA on the weekly chart. We've got higher lows, but this looks interesting. On a daily chart, most definitely the sellers are in. As I said, around about 81, 200 is possibly the next port of call should we breach this level at around about 92. So that is significant. Now let's just have a look at some things which are, that's a trader dashboard, which we're not looking at right now. It's one of the things we're developing as part of the hybrid traders group, which some of you are part of. Here's the Nasdaq. So if we look at the Nasdaq, even with last night's drop, the futures at their worst of it, 7.5% down, about 6.5% if we take into account today's trading. If we look at today's trading, you'll see there seems to be a support for right now until we get some more information in around about this 24,400 mark. It's in downtrend, so if you are thinking of going along this before tomorrow, of course, with Nvidia reporting, this could move significantly after the bell tonight, because futures contracts are open an hour longer than the equity market, and that hour is when big tech tend to report their earnings. So expect a movement. Just be careful if you're in a Nasdaq position overnight. Potential bounce up to around about 150 points, up to around about this 24,700 mark. Just over 200 pips, 200 points. But for now, this looks range bound, which is probably what we'll see until those Fed minutes come out later on tonight, and then subsequently move significantly afterward. Now, the US dollar has been an interesting place, really, since these 3-year lows were hit in September. We've had a steady upcline with retracements as we go. Part of the reason is a slightly less dovish Fed. We did get a pullback here after the November rate cut. But we look as though we're range bound now. We're stuck under the 200 MA as the top end of that range. I would say probably there's around about 99 is the bottom. So between 99 and 100, it's really quite tight as a range on the USD. We'll have a look at some individual pairs in a moment. A little bit of strength creeping in today on the back of just on the back of a little bit of weakness generally. When you look at the charts, this closed the Christmas thing. Trump putting a tariff on Santa delivering toys in the US. Well, he already has put tariffs on toys in the US. anything coming from Asia is obviously tariffed fairly significantly. Despite there being some mellowing of the US-China situation for right now, there is expected to be some more news on that over the next week or so. Here's gold. You can see that significant pullback that we had, but we've got to put this in context. This was a 30% move up. Now we've got a 10% move down at our worst, so hit correction and then bounce back up again. And it looked as though it was going to breach that, but then we got possibly a little bit of sort of Fed muttering. For some of the speeches that were going on, we got the chances of it, even a December rate cut thrown into a little bit of jeopardy. So we got this pullback, but just over the last couple of days, it seemed to have found support at 40.40. This looks interesting now. I'd put this, there may be a short-term opportunity. That's around about $100. Don't forget that, back even up until this level. I'm probably thinking about taking some off the table at that, but maybe even seeing it up to 4,200 if this continues. Now, the data over the next few days, the jobs data, the FOMC minutes tonight, and the PMI data are all going to play into this. I don't see very much that's going to mean gold sells off significantly. Most of the winds are tailwinds. The environment is inflationary. There is a chance of some stimulus coming into the US as well. So there's a couple of things which you're going to reference in a moment, but at this stage, it looks as though gold is quite happy to trade around this. It's certainly over 4,000 level. And then we shall see what happens. If that's yeah, all good. If we look at the other commodity classes, then we've got copper trading mid-range. That's an EA trade, looks like. Likewise with oil is also mid-range. That'll be closed down. Again, that EIA data that's out tonight is going to influence that. Just for reference, this is 4-year lows here. So we did have this drift down. We're still really in a downwards trend channel in the since the sort of end of October. So for the last month, we're sort of edging down and ever down. But this is the lower high that we're having a look at here. Is this a new lower high? We shall see, but you can see the lower lows as well. A very slow drift though. But this is where it's at. As I said before, Bitcoin is where the action is. Let's have a look at some FX pairs. Interesting action on the US yen. 155.68 looks like a very interesting level on this asset. We can see that that's highs not seen for quite some time, since December 2024. So if we do get a breach of this level, you can see 155.60 has been a price area of some consolidation. 158 is possibly the long-term target with this if we do get a breach, but lots of pressures on the USD. Again, we shall see what we shall see over the next few hours. But it does look as though there's a resistance at 155.68, but a level worth keeping an eye on nevertheless. Could well see it in a range. If we look at other asset classes versus the yen, you can see that the euro yen has for the last 3 hours tested this R1 pivot at 180.12. Looks quite happy to be supported over 180, but doesn't look convinced to pop up anywhere near R2. It pulls back on every move to the upside. You can see that in a bit more detail on the 30-minute charts. Looks as though there's some short-term resistance just beneath that, but there could be a high probability trade if we get a move over 180.35. That's probably a level to keep an eye on. The Aussie Kiwi was really interesting. I was just having a look at this earlier. So we've had a natural replacement, natural retracement down to 114.60 from this level at 114.80. So around about 130 pips. You can see we've bounced about a third of the way up on that already. So this has created a sort of interesting price level around about 115.18. Possible move up 25 to 30 pips. Here I will be keeping an eye on this. possibly. Let's just have a quick check-in on the fixed market's gone fairly flat. The Aussie Canadian dollar is selling off pretty significantly. We'll go through S1 on the 30-minute chart, but really haven't consolidated that position at all. Although there's a potential trade on if we breach 90.71, there's an S2 pivot there at 90.62. So, but that looks like a really important level if we look historically on a 4-hourly chart. So I'll be almost ignoring that pivot there and be focused on this price action here. So that's the lowest close there and here at 90.75. We're testing that right now. Those two candles have been really bearish. Australian dollar looks really weak. Look at the Aussie yen on a 4-hourly chart as well. Time to close these positions down, methinks. We're sort of range bound on this, so weakness in the Aussie and the yen. At this stage, we're getting a little bit of a bounce. But that just doesn't look tradable at all, really. It's just way too noisy. And let's just check out GB pound Aussie, which has had a strong day. There's a 30-minute, but really most of the action was in Asia this morning when the Aussie was selling off. Could be an opportunity if we breach this level here at 222.27. That was tested yesterday at this level, and yesterday morning and evening before we had this spike to the upside. And we're going to get the same again. It's not compelling. GB Kiwi, let's have a look at that. This actually looks slightly more attractive. We've reached the hour pivot 233, moved up to 233.34, pull back again by about 30 pips. This looks like a high probability trade. So I'm going to make this my chart of the day for FX, GB pound Kiwi, 30-minute chart. There's the move potentially up to 233.87. So lots of things to have a look at, but it just feels like now we're just waiting for more market information. So you're going to have to be patient for the right setups, I suspect. A couple of US stocks to have a look at. I'm going to start with probably one of my favorites at the moment. It's not the MT5 dashboard. Let's put that right. There we go. Is REMX, which is the rare earth and strategic metals ETF. Obviously, we've got a sell-off after there was some resolution between the US and China on the back of rare earths. You can see what a shockingly high move this has been in all rare earths, 120% to the upside. So not surprising, really, to get a pullback of that magnitude. But we're setting up again. Looks 73.31 looks like a really interesting level. You can trade it on MT5. So that's one to have a wee look at. Lithium stocks continue to look interesting. Here's PLS. Sort of watching this level here now. Are around about 422. Move up to around about 460 or 470 is potentially on the cards on that. So that's one of my faves on the ASX, although it's hard to pick one that's really rocking at the moment. OYC, rare earths again. You'll see rare earths have had a really nice bounce. I like this. I think this is worth keeping an eye on. That move back over 1510, another rare earth can be shot up, came back down, ready to go again potentially. Back over that level there. Possible move up towards about 1680. I think that's strong. So keep an eye on that one. Now, just into the US, let's have a look at Tesla, which seems to have found a home at around about $400 over the last few days. So stuck range bound. Tesla's an interesting one. So we've had this fairly significant pullback that we had through early November end of October, early November, but it does look as though it's found an establishing support at 400. Would need to get back over 413 to be interesting, but the stock really that everybody's going to be having a wee look at, it's not CCL, but I'll put that up anyway. because if this gets back over 200 MA, it might be worth a look. One of my favorites over the last few days, as those of you who follow my charts for the day, has been MU. That, like all stocks in this sector, has pulled back. You can see an extended out, it's doing quite well, but I wouldn't be entering any of these for right now. AMDs or microns. The one that everybody's watching tonight is, of course, NVIDIA. So where are we at with NVIDIA? The leading AI company, and these guys invariably smash their earnings out of the ballpark. They seem to be very conservative in terms of their estimates and usually beat them with some significance. So after making our way up to about 210, we were talking back here about this being a $200 stock, potentially, came back down and it's resting around about 179. So we've had a fairly significant pullback of around about 13%. So definitely in correction territory, and the fact that it's found a home at this level is not surprising. In fact, arguably, you could say we've started to bounce off that already. But these earnings are gonna do two things. First of all, they're gonna obviously impact on NVIDIA as a whole, but secondly, it's going to impact on the sector as a whole. The narrative over the last couple of weeks, particularly, is AI. Ooh, have we overdone it? Have they got the infrastructure to support development at the pace that they want it to do so, which is questionable. AI uses an awful lot of electricity. Have they got the chips to be able to support it? The answer is no. So they can't make chips fast enough. So, but there's no doubt at all that there's no big business on the planet really that's not talking integration of AI in some way, shape, or form, right across the sector spectrum. So really interesting night, because this will either play into the narrative that AI is overcooked, AI stocks are overcooked, or AI related stocks on the Nasdaq are overcooked, and also, of course, can play into the opposite in terms of yeah, look, they've smashed it out of the ballpark. There's the evidence that all's well. Let's rock and roll, and let's see some buying back into the Nasdaq. So this is where it's at. I'll be looking at this tomorrow morning at the extended hours trading, and just seeing what the report was after the bell. If you Google NVIDIA earnings, it'll tell you what it is and what the market response is. More importantly, in after hours trading. So keep an eye on this. So going back to our story about bubbles, NVIDIA is not in any way, shape, or form a bubble. It doesn't tick off the criteria for what a bubble may be. That doesn't say that perhaps there wasn't a little bit of evaluation. That doesn't say there's a little bit of market doubt about how robust this is, or some of the other headwinds that are not specifically related to AI may be in play, such as the infrastructure, such as costs, such as availability of chips, etc., etc. So we may have a clearer picture after tonight. That's the bottom line. In terms of cryptos, well, arguably cryptos can't tick off the same tick list, which is why they tend to get hit harder. Cryptos tends to respond well to low interest rate environments when people have got a little more money slushing around, which obviously isn't the case, irrespective of what Trump says. There is pressures on the US economy and the amount of money people have, irrespective of what level they are. Unless you're a tech oligarch, then really it appears to be a struggle for most. So if we look at the two asset classes, Bitcoin versus NVIDIA, Bitcoin is the one that most fits into the bubble territory. But again, there's sort of suggestions, or there's reasons put forward why it may not be quite as, it may well have been overdone. But again, the jury's out on that. So I just thought I'd cover that because it is part of the narrative at the moment. Well, the factors kicking around, well, let's talk about US interest rates very briefly. The expectation was if you wind the clock back a month, that they were going to cut rates in November, cut rates in December, and possibly even in January. If we look at the Fed watch, which is the likelihood of a rate change, you can see the rate probability is less than 50-50 for a December meeting. Trump will go la la. Now, we only have to look back, right? So if we look back to 1 month, to the 17th of October, the expectation of a December rate cut was 93.7. Even a week ago, it was over 62%. So the fact that it's down here right now is quite staggering. So, and then, as I said, the expectation was come January, there will be another cut. And you can see here, so what it's priced in right now is that there is essentially a like 70% chance of one rate cut between now and January. And again, you can see how those numbers have dropped from a month ago. If we look here, there's 2 rate cuts, 52% a month ago. Now only 18%. So a real change in what the Fed, the expectations surrounding the Fed. So that is one of the reasons why we've seen markets sell off. Now it's interesting. I mean, part of that, of course, is the Fed has had no solid data to plant its flag in terms of official jobs data. So there's and inflation has popped up back up to 3%. So there is the chance that they won't, but it would be surprising, or it could be very, very dependent on that jobs data tomorrow. We get bad. It could be the case where bad news becomes good news. If we get weaker jobs data in the US, I think the Fed's sort of got to act. It's got to. It will respond to that with a rate cut. There's also, you may have heard about this before, there's quantitative easing, quantitative tightening. We're currently coming towards the end of the quantitative tightening cycle, where quantitative tightening is where, or quantitative easing is where there's money put into the system. And this is usually done by buying treasuries, buying US treasuries. The Fed actually buys them and then sells them off at a future stage. Quantitative tightening is the opposite of that. So the word on the street is that come December, they're going to finish quantitative tightening, and by January, they're going to start quantitative easing again, putting the money back into the system through buying US treasuries. So that's sort of interesting. And that may be a way of supporting the economy without having to cut interest rates. Of course, Trump would go nuts because, of course, he thinks that interest rates should be significantly lower than they are now, although the inflation figures don't say that. So that's where the Fed is. But as I said, once that jobs data drops tomorrow, should it do so, I think we're going to get a better picture. I think we're going to get a significant movement one way or the other in terms of the likelihood of a December rate cut. So watch that as well. The movement on the market will be significant. One of the reasons the NASDAQ has sold off more than any other index is because the NASDAQ is very interest rate sensitive compared, for example, to the Dow. So there's the combination in the NASDAQ of AI valuation concerns, of a slightly more hawkish Fed, or a slightly less dovish Fed is probably a better way of putting it. So that's where it's at. That's what's happening right now. And that's why the next couple of days is going to be really key. I will come back to that, Johnny, for sure. So that's where it is. The US economy, as I've already said, is, if you look at the man on the street in terms of affordability, it is why, although the Democrats were expected to win most of the seats that they did win last week, it was the margins that was significant. Some of that was an anti-Trump vote because essentially people are really upset that they haven't got any money. The re-election promises of lower prices are not there for anybody to see, with the exception of possibly oil. But that Petrol is only slightly cheaper at pumps, or gas as they call it. And eggs are slightly cheaper, but everything else is going up. We've seen the response to that this in the last week, which has been the administration has suggested that they may drop tariffs, not remove tariffs, but drop tariffs on some agricultural products such as bananas, wheat, I think, and I can't remember after that. But obviously, beef. Beef is the key one, which may have an impact, positive impact for Australia or Australian beef companies such as AAC. So, but key to that is what is the jobs doing? And of course, what's that PMI doing? Because that's a reflection of what businesses do. Now, on the flip side of that, of course, we had one of the best earnings seasons we've had for many a quarter, with 82% beating EPS expectations, 76% beating revenue expectations, and a projected growth of 13% plus, which is a very, very good earnings season, way, way better than expected, way, way better than has been the case, and better than last time. So it appears as though the US corporate world is in a good place. Though the part of the reason there are so many job cuts is US corporate reducing costs, possibly even the AI impact of not needing as many people. So that PMI data, particularly that manufacturing PMI data, which is being far more important than services, is going to be really important on Friday. And if that's a weak number, again, it's another pre-election promise that manufacturing will be surging into the US, not fulfilled as yet. So that's where that's at. Of course, trade. I've already referenced the reduction in tariffs on some agricultural products coming into the US. I mean, people are still persuaded that this is great because it's bringing all this money into the US. Well, it isn't bringing all this money into the US. It's taking it from US companies. It's like GST. You sell something or you import something and then you sell it and you pay the government. So you import something in the US and it comes from not the exporter, it comes from the importer. So if Widgets ABC buy some widgets in from China, they're going to pay 35% of that to the US government. And of course, then they're going to pass that on to the consumer. It's not a tax on China per se. It may make China less competitive, for example, but it's not paid by the Chinese. There may be some negotiations in price so that the impact on the US company is less in terms of their profit margins. But reality is that's what's inflationary. Ultimately, that cost is borne by US companies, which is then borne by US consumers. Anybody who pretends that this is a tax on China is talking nonsense. Okay, that's the reality. So the fact that there is some mellowing of the US-China relationship is good. It's now, I think it's 35% is the tariff at this stage. For many products, there are some which are lower than that. But of course, China have got the rare earths card, which is now sort of, and that has all sorts of impacts as well on the AI or the support around the AI world, which is one of the reasons why rare earths have done pretty well. And in terms of locally, well, the RBA have essentially not only paused, but they don't seem in any rush at all to do further rate cuts. The higher than expected inflation number and the relatively positive jobs numbers that came across have really sort of killed the RBA's motivation to drop rates any more than they would have, or any more than they have already for the immediate future. If we look at the RBA tracker, we'll see what that's at now. The next, so this is updated. Next is on the 9th of December. So there's any chance, 92% chance of a pause at the December meeting. So no Christmas present from the RBA, unfortunately. But that's really the bottom line with that is on the data, really. So there we go. If there's any charts or anything you want me to have a look at, then sort of let me know now. Just a couple to watch, as I've said. REMX, I do like LYC in Australia, and potentially lithium stocks. Just keep an eye on them. Watch Nvidia and AI stocks as from tomorrow. CBA, CBA. Give you just thoughts. Down 0.8% today. That's had a significant drop off, hasn't it? It's interesting. Wow. That's 15%. That's heading towards bear market territory for CBA. It's the lowest it's been since. We had a great run up between March and July, but since then it just sort of tapered back. A little bit of a ralliette before the last sort of week or so. It's really got slam dunked. What did you want to know? In terms of where this sits, matched to its 200 MA. This was the key support level. They're at around about 163.18. So we're back now at sort of early April lows, so 6-month lows on CBA. Potential support at this level. If we look back here, price action was resistance, support, resistance temporarily. So 150 looks really important as a level of interest. So upside potential on this, I wouldn't touch it with the barge port for right now. To the upside, the downside potential on this is really the next key support level, which is yeah, there's an awful lot of price action around about 143. So about 4 or 5% in the short term. Is that 4 or 5%? Have I done my maths right quickly? Yeah, 4.75. That's not too bad. If you were to be interested in a long position, or potential bounce off this level, which it could well do because this has been support previously, then to me, I wouldn't be jumping up and down about this unless it sort of started to tackle that sort of 155 level, and then you sort of again you're down to not very much in terms of the risk of around about 5%. So keep an eye if it breaches 155, I would say, to the upside, but it is right on the cusp. 150 is a nice round number. The markets will be looking at 150, which was, what was the low? The low of today was 150.47. So I think that 150 level, really nice psychological number. Any others you want me to have a look at, ladies and gents? We could be in for a Santa Claus rally. We need a few things to just click into place. We need the Fed to be slightly happier. We need jobs data to stabilize in the US. We need inflation to not get any worse. And I think we'll see a really nice rally into Christmas once things start to get interesting. Yeah, I was looking at BVS previously, but it didn't bounce off the 200 MA as I thought it would. I thought it might bounce off this level here. It just continued to go to the downside through 250. So I'm not really enthused about that right now, to be absolutely honest. And gold stocks, look, if you're not trading gold, if gold is to rise, then gold stocks could be worth a look. WGX, having a look at a WGX chart for some time, but that's looking rather tasty to the upside. It's actually survived quite well. That's probably the $6 is probably the target short term, so around about sort of 7% if we get continued buying. Iluka obviously in the rare earth space as well. A little more work to do than LYC, looking at $7 there, but it's only about 5% up to 732. Don't make that very much then. Uranium stocks have just been really difficult to call. If we look at Paladin, this could be one of those that you're welcome, Johnny. This could be one that sort of you can see there's the 200 MA. It's bounced off again. This would be a level of interest here at around about 8 to 15. That might be. It just looks really, really messy in this area here. So I'm not that enthused about that at all. What are Deep Yellow doing? So theoretically, as a long-term hold, maybe it isn't bad to hold some uranium. But look at deep yellow. It's looking very similar. It doesn't look compelling at all. There looks to be no enthusiasm to push it much beyond the 200 MA. Showing out a sign of that. 185 could be a level of interest at some stage. Maybe even $2 might be a. But it just looks very unattractive at the moment. But if it does get up to, say, 180, you might start to think we should reach this level here. You might start to accumulate into that if you still like the concept. Retailers are awful. I haven't looked at Macquarie for ages. Same old with the banks. All the banks are getting belted. Macquarie looks like a short, maybe even down to 170. So yeah, I'm not seeing much. I'm just sort of having a look and see if I've covered everybody's chart. US Airlines. I can have a look at US Airlines. I wasn't enthused last time I looked. Let's have a look at maybe Delta. I think most of the transport stocks have struggled a little bit. That's actually not an unreasonable call to keep on your watch list. You can see we've got a bounce off this level around about 56.50. There's the resistance at 62.28 with a potential move up 67, 68. I get stuck a little bit around about 66.50, but that's still 6.5%. Yeah, worth keeping on your radar, but I'd be patient to see if it breaches this previous resistance. I think potential $2 gain or $60 stock isn't really a good risk reward for this stock. But the fact that it's bounced off to 200 MA, the fact that that resistance is sitting there means it's really worth keeping on your radar. American Airlines, that's probably closest in alphabetical. Where are you? Yeah. We haven't got AAL here. Let's see if I've got LUV. Might have to put it on. Right, LUV. A bit messy. It's retesting 200 MA. I just think it's going to get choppy. Delta's a far cleaner technical chart. Don't know who Light are. Who are Light? Oh, Aluminium Holdings. Whoever Aluminium Holdings are, boom. That looks like a post-earnings run. Let's have a check out on those. This could be the unearthing of one. Okay, LIT. Let's find out some more. What do they hold? Doesn't tell us much. Numbers are very good. Revenue up 58%. I wonder it's flying. Optical equipment, maybe. Photonics. There we go. Okay, well, there's one switching. Right, go and have a check out of Light. They look as though they're firing. That's a little bit of an out of left field. It is a bubble. Anyway, go check out LITE. As I said, that's really fibers, optic, lasers. Yeah, that sort of vibe. I guess that fits in with the lumen thing. Anyway, there you go. One to keep an eye on. I hope that's been interesting, useful, etc. Thanks very much for all your suggestions to have a look at. Thanks for all your comments and questions and just being here. Always really, really appreciated. Thank you also, of course, to those watching live on YouTube, if you're watching this live, or if you are if you're watching it on catch up, then if you wouldn't mind clicking like, that would be wonderful. Either way is good. But I will say bye-bye for now. So you guys take care of yourselves. We'll see you again very soon. And I will love and leave you. Enjoy the rest of your Wednesday evening, wherever you are.